we're going to be hearing from David Shafrir, the CEO of Secure Digital Markets and the executive chairman of the GDA Group. I've had the pleasure of working with David for 5 years now, specifically almost my whole career in the digital asset space. David today is going to be in conversation with Brien Biondi to better understand the intersection between alternative investments and family office portfolio. I'll leave it to Dave to introduce Brien in a moment, but just for some background, David oversees the GDA Group's long-term strategy, capital and acquisition initiatives, while also helping with the management of our sales and trading arm, Secure Digital Markets, which is our Canadian-based brokerage. Under David's tutelage at the firm, SDM's grown to be Canada's largest digital asset liquidity provider. And today we operate with a global footprint in over 20 countries. David has a previous track record scaling a lot of technology companies and generating strong returns for his investors. He's had 2 previous exits in the financial payments and the SaaS technology space. David, I'll hand it off to you. Thank you. And Brien, guys, enjoy your conversation.
Well, thank you, Zach, for a very robust and generous introduction. I appreciate it. To that point, it's been a pleasure watching your growth here within the digital asset and blockchain space and as a moderator. So thank you so much for that. In the meantime, though, I'd like to introduce my esteemed guest, Brien Biondi, the CEO of Camden Wealth, North America, and the Institute for Private Investors. Brien has 30 plus years of business management experience and most recently the last 15 years acting as CEO at Camden Wealth. So Brien, thank you for joining me today.
David, thank you. And Zach, pleasure to be here as well. Good to see you guys.
Indeed.
Looking forward to a good 30 minutes.
Indeed, absolutely. So Brien, I'd like to take a moment to introduce our attendees to Camden Wealth. So perhaps we can take a moment to describe in your own words, what is Camden Wealth and how do you guys operate within the investment sphere?
So Camden is a 28-year-old multi-generational membership organization. And I compare it to a group I'm with, YPO, where it's a community of CEOs learning and sharing. This is a community of wealth holders, all different shapes and sizes, multi-generational, learning, sharing, and educating. We're not money managers. We facilitate education and connectivity. So we provide, one track is around investment education, because the family offices, the private investors, their purpose is to preserve and grow the wealth of the family, and they want to understand the investment landscape. So we will provide resources throughout the year in the areas of AI, applied materials, 3D printing, cannabis, blockchain, opportunity zones, and we'll bring in best-in-class resources to educate the families in these specific areas. We have a 22-year relationship with Wharton, where we do 2 classes a year, Sunday through Friday, hardcore investment education, real estate, credit, private equity, REITs. We also have a family track. So we provide a lot of content around family business. And these are, 100-year plus multi-generational operating businesses. We have a family office program. We have a family impact and investment, because impacts become the new rage. And we have a family investment and alternative conference. We do a lot around direct deals, because that's something families are all looking to do, is how do I co-invest with other families? So, the typical program, the last one we did, we had about 70 families on the call. I had a big family who made their money in lumber and timber talk about how they co-direct with other families. And then 4 families presented live investment opportunities. We've got offices in London, Hong Kong, and Mumbai. And so we're the biggest community supporting, educating, and helping families learn and grow.
Very interesting. So there's a couple of points in the topics that you mentioned in terms of industries of investment, several which I think if 10 years ago, those words came out of your mouth, 3D printing, cannabis, potentially digital assets, would have been surprising, if not a non-starter for many family offices.
Right.
So, to jump into it, and with your wealth of experience with dealing with these family members within this dynamic, how nimble and flexible are family offices in terms of adapting to these new trends within the industry? And particularly in comparison to, traditional financial money managers that might have a little bit more resistance than one would think.
Well, they're significantly more nimble than a traditional money manager. I mean, a money manager is going to have compliance, regulations, committees that need approval, where the office is very nimble. And if they want all of a sudden move and invest in a different asset class, they can do it. And I saw a lot of that, about 4 years ago when cannabis really started to emerge. And obviously that was something that institutions couldn't touch and wouldn't touch. And a lot of family offices moved quickly to get in and did quite well.
Interesting.
So you will see, and I think that's one of the advantages with a family office, is the fact that they are so nimble.
So for some of the attendees of this conference, let's take a moment to step one step back and describe, why would someone create a family office to begin with?
Well, let me start by saying, what is a family office? So, family office in my book sometimes is a loose term, because I've seen a family office that's one person and up to several thousand people. That's created. And we've got a single family office, which is an office that's set up to preserve and grow the family's wealth. There's a multifamily office that is, supporting many families. It could be 2, 3, or 20 families. And that's a multifamily office. Mm-hmm. I was with someone with the Walton family just recently, and they said, if there was an issue that came up during COVID, who would they call? They would call their family office. But so that was a family office that was, helping the children with non-investment related activities. Mm-hmm. Another family office, 9th generation family office. They do nothing but pure investment for the families. So some offices tend to be a little concierge service. Some are strictly investment oriented. And then, the family office, normally it's the first or second generation wealth creators that are setting up a family office to provide structure and legacy for generations to come down the road, to help those generations preserve, grow, and use that wealth. And then, normally there's going to be a board, a family board that would oversee that family. Looking at, the board would also be responsible for governance and succession and transition. Fair enough. Just, the family offices do a lot of different things. There's another family office this recently where it's a children of a 5th gen, and they're very involved in social investing. And that office focuses primarily, it's an office of about 20 people, and all they do is focus on social investing for that family.
Very interesting. Yeah, you mentioned that impact investing has become a continuing trend. And I think that we're finding the alternative investment market the term alternative is expanding every day, I think, as per your description at the beginning. And are you seeing these family offices take impact as a social responsibility, or more so towards a trending diversification of one's portfolio, and therefore this is just another spot in the ladder? It's a candid question, but
yeah, no, more the former. I mean, impact investing is that's the big rage these days, and more families want to be part of it, and I think it's also part of their brand as a family, right? They want to be connected with something that's doing socially good in the environment, in healthcare, whatever it may be. They want to be associated. They want to be seen with an investment that's really helping mankind. And that, I mean, particularly with the next gen, that is becoming so much of the family office time. I mean, I was recently with a family in Chicago online, and the CIO said that the children pretty much want about 80% of their investments going into impact. So it's a big focus of families these days, and will continue to be. I mean, that's one of the reasons that we actually put on a 2-day conference around impact investing, and it's packed because families don't know what impact is. You know, what kind of return should I get? How does it differ from ESG? How does it differ from philanthropy? And that's the education that we're providing with the families.
So within a dynamic of a Camden Wealth, where family offices are being provided resources and somewhat guidance, I suppose, to help shape some of the decision making, what benefit do you see from family offices interacting with each other in terms of communication, potentially syndicated investing? Where do you see that continuing to direct as the family office continues to evolve?
Well, I mean, I see it on multiple levels. I mean, at the very basic piece, it's a peer-to-peer. So it's peer-to-peer of principals, next gens talking to one another. And certainly a big area is investment, right? Because families all get together. You get a group of 15 families together. They all want to know what they're investing in, who they're investing with, how are they getting deals, how are they sourcing them? Can I invest with you? So, I mean, at the very basic premise of it is just the community of sharing, learning, and understanding what other families are doing, and not feeling so isolated or alone. And the issues can be, as I said, around next gen, succession, transition, and as the investment landscape is continuously changing, families want to know what's going on and what other families are doing. So there's a real desire to be part of a community of peers of other families. At the very minimum, just to see deal flow.
Makes sense. I mean, everyone, no one wants to miss out on the
Right.
on the latest, hottest IPO. The typical investment horizon for a family office has certainly changed over the last 25 years, and particularly with the advent of the digital economy and the digital assets having become mainstream now. With Camden's job to be acting as a bridge, providing clear and vetted avenues and various investment opportunities, how do you see digital assets becoming a part of that conversation? Digital assets being qualified previously as an alternative asset class, we are seeing greater and greater interest in the family office space. What is Camden doing to create these clear and vetted channels?
Well, let me say, we're not providing clear and vetted channels. What we're doing is we're going out there and saying, this is the type of content that needs to be in front of our family. Let's go out there and find best in class in those specific areas. You know, whether it's cannabis, or whether it's opportunity zones, or it's blockchain, like yourself. I mean, you're a classic, you're a perfect example. I mean, you guys are best in class in this space. And so we want to get you in front of our families to educate them, because we know that our families right now very much are interested in the blockchain space. I mean, they've made it clear to us, and not one or two or a small group. They're all interested in it. Now, whether they're investing into it is a different story, but they are all very interested in it.
So that continued understanding of the differentiation between Bitcoin as a brand and as a virtual currency and product versus blockchain as a technology that's underpinning this increasingly far spreading type of investment. You're seeing that understanding coming through the family office operators?
You know, I do. You know, I think right now I would say there's a little bit of hesitance with Bitcoin, and that would be more around kind of risk and return. You know, how much do I risk to double my money? Whereas with blockchain, I think they see that as a much less riskier and a much higher return. You know, I would say to you right now that about 50% of our families are invested in blockchain in some sort. And I expect that to continue to rise. And I think the other piece, David, which is important, is that our families are very long-term thinking, right? They don't need to have a return in 2 years or 5 years, right? They're thinking 100 years. They're thinking their kids, building, growing, preserving it. So blockchain really fits into that space quite well. And that's why there's so much interest in learning more about it.
Very interesting about the view long term. Curious with this last year we've had, I think, an unprecedented year in terms of economic impact from COVID worldwide, as well as perhaps unexpected growth in various sectors. What trends are you seeing on the lips of your family office participants in conferences in this evolving landscape, with COVID hopefully being somewhere close to our rear view mirror in the next 6 to 9 months? Where are you seeing the trends lie in a post-COVID world, so to speak? Or post-COVID initial impact world, I suppose I should say more clearly.
Yeah. And before I just, before I answer your question, I would say that this past year, I think because of the instability of the economy and the markets, we saw our families, the interest in crypto has increased significantly as a result of the last 12 months. And that's evidently clear that there's more families seeing this as a better option than, certainly cash in the bank and gold. So, and that's why we are providing more education to the families around this space. I don't claim to be an expert in the space by any means, but I do know that the families are looking to be educated in the blockchain crypto space. And this will be, I think, will become a very big part of their asset allocations going forward. But looking, I'm sorry, did I cut you off? Were you going to say something?
No, I was going to simply ask, based on that comment, it's obviously become widespread news with Tesla's investment into Bitcoin and further allocation from cash and typical reserves on a balance sheet going into inflationary protection, such as Bitcoin. Do you see family offices taking a similar attitude towards their balance sheet management?
I do. And by the way, I don't know if you noticed, but I saw this morning that Tesla said you can now buy a car with Bitcoin.
Indeed.
That came out this morning. So
I'm not sure the market saw it. We didn't see a bump as we normally do with Elon tweeting things, but I think it's certainly from a perspective of, as per Zachary's introduction to myself as CEO of Secure Digital Markets, we continuously look at the various advents of products like Bitcoin within a more traditional space as providing security for the atypical investor in a product like Bitcoin. Family offices being the biggest trend in our sector over Q1 of 2021, and in no small part to our participation within Camden Wealth. And by the way, I encourage all attendees to visit camdenwealth.com and learn a little bit more about the organization and the membership. But we continue to see inquiries to understand how to become a part of this ecosystem. And, trends like major corporations that are publicly well known holding Bitcoin on their balance sheet and other similar assets has certainly increased, allocation from less public members of the capital markets. I'm curious, and this is just an off-the-cuff question. What percentage of your membership do you think holds Bitcoin as a replacement for cash over the last 6 months?
Well, I know more than 50 are in the blockchain. I would say Bitcoin. I'm gonna say I think it could be 40%. And that's a guess, and that's just based on discussions that I'm having with families, asking them.
You're having the daily conversation.
Right. Yeah. I'm always curious, who's got Bitcoin. And it's funny, we're doing a mega trends event in a couple of weeks, and I'm going to poll the families on Bitcoin and blockchain and send you the results of that.
So I guess having last looked at the markets at about $56,500 US. So I guess that's the value of the question, is what's the comparable to our fellow members on NASDAQ and otherwise. But I guess we'll let the market reflect itself for the next little while.
You know, and there's a lot with the families there is a lot of discussion. And I think, we're looking to do a presentation on these NFTs because,
Right.
Clearly that's something that will be a natural fit for our families. No question about it.
Absolutely.
So,
Yeah, at GDA, we've seen the trend of NFT come rapidly in through the pipeline, and as Zach had mentioned in the introduction, or previous to his previous panel, we've got Rare Dot Store launching with a partnership that we are seeing an incredible demand. Some through Camden Wealth, some through institutional and non-traditional investors in the blockchain space, seeing the obviously the sale of an NFT piece for $69 million through Christie's, I believe it was, over the last 2 weeks, and a continuation of this product. So when we look at a family office dynamic, obviously there's the legacy members of the family, and as the children tend to take over, where are you seeing the view of such items like NFT in the minds of the more legacy generations within the space? I mean, traditionally one would be thinking of purchasing a Picasso versus a non-fungible product that would be displayed only online and that frankly anyone could Google. How are you seeing these responses to this type of product?
Well, I don't think I've spent enough time with the families on this particular issue. I mean, I know that it's something that's coming up and they want to learn more about. And I think particularly as the families, you're dealing with second, third, as the generations get bigger and there's more family members involved. That's why this is an appealing platform. And that's why there's interest in it right now. And I've had several families approach me about learning more about that and getting involved, but I haven't really talked to them about their views on it per se, and in a micro level, more just very macro. The other thing, David, I would add to something earlier that just struck me is that right now I don't see the families doing a lot of direct deals in blockchain. They're looking more at funds and experts, the people that have that expertise, and they feel more comfortable in that manner. I think that will change down the road, but right now, I think until you've got more of that talent on staff, which I'll talk about in a minute, but you're seeing funds with the experts as being kind of the safe avenue for families in terms of the. I think
that's been a wide trend within the sector as a whole.
Makes sense.
Retail being the initial catalyst of Bitcoin, but what we're seeing is products launching such as ETFs and otherwise, which is giving a more savvy than, let's say, a general retail investor who just simply goes onto a Bitcoin exchange and even understands what something like that might be. We're seeing the institutional investor product going into the hands of, that mid-tier investment target demographics. So interesting that you mentioned that about talent. So, and I'll ask you probably a more traditional question, but one that I think would be of interest to the attendees. Look, family offices are continuously struggling with that age-old problem, between wealth accumulation versus preservation versus, investing. As per our conversation with Bitcoin and other digital assets becoming a stronger hedge against traditional markets, do you think that family offices are going to continue to invest not just capital within the market, but into their infrastructure? And are you seeing that become a bigger component of conversation for lack of a better term, around the water cooler, so to speak?
Yeah. So, you mentioned earlier, you asked me about trends for 2021. So I put together a list that we've used kind of looking at family office trends for 2021 that will continue to be shaped by COVID in technology, social issues, values, taxes, as well as impact on current portfolios and new investment strategies. So here's a list of what I see as the 10 changes, and they incorporate your question about talent and infrastructure. So looking ahead at 2021, we see wealth in the US and globally continue to increase. With the stimulus, we expect this will be a good year and wealth will continue to increase. Valuations require taking a more cautious outlook to new investment. And we've seen just 2 weeks ago, family office event, we had 3 significant CIOs who normally would be doing 5 to 7 deals over the last year have done 1 or 2. Valuations are quite high. Employees will continue to work from home in the near term and possibly in the long term. And this is a consistent message that we're hearing from the family offices, and they've felt that it's a better way to helping their employees. Upgrading.
Really seeing that trend across a wide swath of markets. Yes.
Upgrading current technologies and staying on top of the latest developments. This is certainly a significant area that family offices are growing. The number of offices are growing. You're seeing, obviously a tremendous amount of wealth that's been created, but they want to stay competitive. So you're seeing a lot of new technology platforms that are being brought into the family office. Cybersecurity and cyber risk for families has never been greater. And this is a big, big issue. It's in their top 5, particularly too, as these families, as the employees start to work at home, it brings in a whole nother level of security and cyber that needs to be addressed. There will be an increased focus on private investment as a percentage of the total portfolio. I mean, this has been a trend over the last few years, and it will continue to be. Especially among next gen, there will be continued focus on impact investments, including ESG. There will be a renewed focus on succession planning, transition within the family and the family office. I mean, succession's always a big deal, but over the last 6-7 months, looking at transition and succession has become a greater part of the family's theme for the rest of 2021. And there'll be a shift in focus in risk awareness and transitioning from strategy of growth to one of wealth preservation and asset protection. And I see that fitting into the blockchain, investment strategy as we continue in the next couple of years. And then lastly, we're seeing families that are now really trying to go out and bring in more talent into their office because they need it to address these alternative investments, whether it's 3D printing or blockchain. And so you see a more sophisticated office. They want to rely less on the banks and pay fees. They want to do it all internally and make make it a better, stronger, more competitive family office. It's a lot.
It's definitely, you can take a breath. That was a good mouthful. But I think it certainly shows the in-depth understanding and insight to the conversations you're having with these members of Camden and the family office participants. With this being said, are you seeing these family offices, to your very last point, start to adopt internal team members and strategy to cope with this vastly different landscape than even 12 to 24 months ago? Is that talent coming in internally, or are they more relying on their traditional consultants to bring that talent to their
Yeah, I don't know if how that one is being addressed. I would say where I'm seeing them bring in talent is in specific areas, whether it's it's crypto, or they're going out and finding the specialists in those areas, whether it's AI or robotics, or and that's where I see the talent shift. I think that all of the offices did a reset over the last year and looked at their landscapes. But quite frankly, outside of real estate and hospitality, the families did pretty well in the last 12 months.
Definitely that 40% that invested in Bitcoin as per your estimate.
There you
go. Okay. Well, Brien, I'd like to thank you for joining me today. I think this has been incredibly insightful to give those that are unfamiliar with the family office concept a good starting point. And for those of us that are actively involved, further insight to the trends within the space and within the industry as a whole. So once again, I appreciate it. Should anyone have any questions for Brien, feel free to post in the chat rooms. Brien will be happy to respond via email and or chat, as well as myself. I can certainly direct you there, as well as any questions pertaining to GDA. So Brien, I hope you have a great rest of your day. Let's continue watching these trends, and I guess I'll see you in a couple of weeks at the Mega Trends event.
Yeah, no, David, great. It's a pleasure to be here today. And quite frankly, I'm very appreciative of all the help that you've given our families. So
it's our pleasure, and it's been an incredible experience being a part of the Camden family, for the lack of
very good. You got it.
to end this on a nice pun. So have a great afternoon, and thanks again for joining.
Stay positive, test negative. Cheers.
Much appreciated. I appreciate that very much.